Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 7th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, what's on deck for us today?
Yeah, I'd like to take a look at Rocket Lab, New Holding, and Cisco Systems.
All right. Well, let's start with Rocket Lab, which is scheduled to announce Q3 earnings on Monday, November 10th. Earnings for the commercial space company are projected to come in at a 10-cent loss versus a 10-cent loss the previous year. And revenue is seen rising 45% to $151.8 million. And here's why we're watching Rocket Lab. We're going to be looking at future launch plans and if they're reporting any sort of backlog. And Ed, Rocket Lab reached some critical mission milestones recently. The company announced another multi launch deal with a Japanese based satellite manufacturer in early October, and shares have rocketed 120% or more this year, Ed. So, what's on the radar with Rocket Lab, and why are you watching it?
Yeah, I mean, this has been a leader, but boy, is it volatile. I mean, this one moves up and down, but space is a hot area, and there's a number of players, but this is one of the more established. Obviously, SpaceX is the most established in the private space flight, but that is not yet trading. This one, seeing a lot of contract wins, suggesting that we're going to see a lot of really tremendous growth on the revenue side. Losses are starting to narrow, so just want to see maybe a path to profitability, seeing that backlog remains strong, and just seeing how we go from here, if that momentum can continue, at least for the fundamentals.
And in terms of the technicals here, Ed, we can see Rocket Lab jumped above a 50.92 buy point out of a cup with handle base here in early September. It rocketed into a 20% profit taking zone, but shares have since pulled back. It's almost round tripped this prior buy point here, and it's trading solidly below the 50-day line. So, what are your thoughts here with the chart action?
This one's really difficult, and who knows what this will do when earnings come in, but that's not good action. And I mean, we've seen this with a lot of this speculative. I mean, this is not profitable. I mean, this is a real company and we're doing real things, but it's still, I think, fairly speculative. When will it turn profits and other things? And obviously, a lot of risk with every launch, kind of situation, in a way that a product launch, for most companies isn't that same kind of risk of, not exploding on the launch pad. This one probably needs to set up again. Really sharp weekly losses, broken. I mean, that's down a third almost from the highs from just a couple of weeks ago. It probably and it back into the prior base. It needs to set up again, which is too bad. A week or so ago, it looked like, maybe it's hanging on, but then it's not anymore.
Okay, well, let's move on and take a look at New Holdings, which will report Q3 earnings on Thursday, November 13th. Earnings for the Brazilian banking platform are expected to climb 41% to 16 cents per share, and revenue is projected to rise 20% to $3.52 billion. And here's why we're watching New Holdings. We'll be looking at customer account growth, and we'll also want to see if executives give any color about a new Amazon new partnership. And again, Ed, New Holdings is the parent company of Brazil's New Bank. And much of the stock's run up lately can be attributed to its stellar growth numbers. Its most recent earnings report in August saw a 17% increase in new customers, and deposits rose 41%. So, what are you looking at with New?
Yeah, and it's like there's sort of the backdrop is that some of the tariff concerns that came in a few months ago. There's hopes that those will be eased. I mean, New Holdings wasn't directly affected because it's domestic; it's not doing that. But still, you don't want to see the Brazil's economy suffer like that. So, want to see that. The Amazon news is really a big deal. That major player. That's Amazon's way of competing with Mercado Libre, which is this e-commerce and payments giant. Probably helps New Holdings as well, because there's a huge unbanked issue. And so if everybody started going with Mercado Libre, I'll just sign up with that. Well, now they have another option of doing New Holdings. I'll do that because then I can team up with Amazon. So it's just in there. It's like this is showing accelerating growth on the revenue side. We'll see if that can continue. Earnings growth has been strong. It's just been a solid performer in terms of earnings fundamentals. The chart has been somewhat spotty, but it seems to have tightened up.
Yeah, and talk to me about this chart because we see kind of base on base action here. It's currently trading just below a 1643 buy point in a flat base, Ed. And, really kind of seems like this level here has been some prior resistance running into that. So, what are your thoughts here with new?
Yeah, if you take a look at a weekly, you can see how long it's sort of been trading in there. And 14 inside this consolidation was a trouble area for a long time. There was a bunch of short-term highs within this base that you can see that it came out of. So often what will happen is big, messy, wide and loose base is that you'll see stocks form handles or bases, near the top of that big, messy situation. This flat base is basically a high handle to this huge consolidation. So that much tighter, 11% after this really up and down. It's like, well, where do you enter it? So that's nice to see the volume dried up, for most of sort of pausing here. So it's nice to see the up down volume is a 1.7, a lot of strength here. While obviously it's not immune to other things like a Brazilian bank isn't an AI stock, it's not, the same situation. So there's not the same correlation. I think this is acting very well, and just you just have to see what earnings come because it could definitely provide a buying opportunity.
All right. Well, let's move on to Cisco, which is scheduled to report on Wednesday, November 12th. The tech company is expected to see fiscal Q1 earnings up 8% to 98 cents per share, and revenue is expected to rise 7% to $14.78 billion. And here's why we're watching Cisco. We'll want to know more about AI opportunities and risk and hear about that future AI growth. That includes various partnerships, but at Cisco could face pressure from NVIDIA, Celestica, and more. This is starting to be a very competitive field. And Cisco got a price target upgrade from UBS analysts ahead of earnings. And that's again thanks to its fast growing artificial intelligence business. So, talk to me about Cisco. This one seems to be coming on lately from AI News. So, how do you see this shaping up?
Yeah, I mean, it's picking up a little bit of pace. It's like one of these old giants like Oracle and IBM that's old leaders that's coming back. And this one's long been a laggard, but showing some strength. It's not really leading. I don't want to get too much of it, but it is picking up. There's so much demand for this. The concern is that, yeah, there's tons of demand for networking equipment, but yeah, will NVIDIA is trying to get into that whole space and take over for Cisco and Arista Networks. One reason why Cisco is down is that Arista Network, its faster growing, smaller rival, that one has sold off on earnings. It beat views and raised guidance, but it still wasn't enough. It's been that kind of weak. So ANET has come down, but Cisco's come down. But yeah, Cisco can it really generate? Can it move the needle finally? Because it's been looking for so long. It's so big for so long. It's always whenever they add something, it was never big enough and never fast enough to really grow, in a strong double-digit way again.
And just taking a look at the chart here, Ed, we could see Cisco struggling after the 72.55 breakout out of a cup here. And I think we've seen this with a lot of stocks in the market lately, breaking out and then rolling back over, but looking for support at that 21-day line. So, thoughts here?
Yeah, I mean, it's just a situation here where we just got to see how if it can bounce back. It is finding the 21-day line. That buy point's still valid. The volume hasn't been horrendous on this sell-off. It's just tough. And that's also, I think, and this goes with other names, but I think especially in the tech space, even if this has strong earnings move, just be cautious. We've seen stocks make a move and then later in the day fall off, or a couple days later fall off. So a strong earnings move, yeah, it seems like the risk is off the table, but in this market, it hasn't really been.
And just switching over to the weekly here, Ed, because we can see, Cisco seems like it's been really range bound here over the last few years. So, any thoughts here on the weekly chart with Cisco?
Yeah, I mean, while the stock is up, you could see that there was an RS line move, in the late second half of 2024, but since then and this year, it's moved sort of sideways again, and then before that, it's been lagging. I think if you go to a monthly chart, you'll see. I mean, this was like the stock of the 90s, and it just hasn't made any real progress. It's been in a downtrend still sort of since, like 2019. And you can just go back and back and back. It just hasn't, it's nowhere near the highs from the dot-com era or before. So that's one thing. It's like it's nearby area and such, but it's like it's also you have to decide, is this someone that you really want to play with? Is this one of the leaders that you want to go with?
All right, Ed. Well, those were some of the top names on our radar, but there's a lot more to take a look at. Maybe there'll be ones we do want to play with. So let's start with AST Space Mobile. That reports on November 10th. That's ticker ASTS, Ed. So another one here, Ed, that had this breakout back here in early October. It ran up 81% profit zone and then promptly fell back off of those highs. But again, what are your thoughts here? It's below the 21-day line now, but looks like the 50-day line is inching closer.
Yeah, and that's not too far above the top of the base. I mean, that's a place where you could hope to find support, like that 50-day, the old buy point. I mean, this seems like a swing trader stock because it just doesn't seem like one or you have to be ready to take profits. Because this one has made some big moves and given them back up and done that a number of times. You can just look at there. It's been a number of times where it's fallen 40% over a few weeks. That's just not. And so this one may be a little bit more dramatic in terms of how fast, but it's not really that out of character. This does this so if you do play it, it's like, okay, if you want to be a wild and crazy guy, kind of thing, and buy it off the 50-day line, 10-week line, I mean, maybe there's something there, but it's hard to know when that reverses it. This is like a little too wild for me, especially in this market, but it's an interesting company, interesting name, satellite, cell phone transmission stuff. It does compete against Starlink and some other things, but so there's, it seems awfully speculative and volatile right now.
All right, how about we take a look at CoreWeave, another AI play scheduled to post on November 10th. I'll switch back to the daily here. And again, this one um, drifting below the 50-day line, Ed.
Now, I don't really understand why CoreWeave is struggling so much versus some of the other data center plays, but maybe the Bitcoin miner turned AI plays are just doing better because of some of the advantages they have. But CoreWeave looked like it was making a comeback, in September or so, but that really fell apart in October. And if you played that in somewhere, surely when it broke through the 50-day line decisively this last few days, I think you just need to be out for anybody who bought recently. And I don't know where, I think most people want to be out. I'm not sure. It doesn't have a long history, has tremendous growth. I don't know where it's going to go. It's going to have huge losses. But I think right now, I think it's more important for what it's saying about AI demand and costs and maybe the difficulty of getting AI demand data center stuff than an actual buy.
All right. Well, how about we stay in the data center theme and take a look at Oklo? It's a nuclear power play that's scheduled for November 11th. But same here, Ed. Looks like this one ran up to a high of 193.84 and has sharply pulled back and trading below the 50-day line.
If you didn't sell some on the way up, you definitely should have sold some on the way down. And I think now it's below the 50-day line. That's a lot of losses. And I mean, maybe if you bought it like at 25 or something, but if you bought it back when it broke out, a couple months ago, yeah, somewhere in there, like, so 86, wow, that's how high up it was. It was hard for me to judge that on a weekly. That's a lot of gain. I mean, that stock doubled and now it's given up like, three quarters of that. You just don't want to be doing that because you want to, I mean, you're going to have some losses along the way with stocks. But when you get a big winner, you don't want to have that big winner turn into a little winner or heaven forbid, a loss. And for whatever reason, a lot of the energy plays, speculative or not, are coming off. And, we'll see. But this looks pretty heavily damaged right now.
And how about we take a look at TeraWolf? This is one of those Bitcoin miners turned power plays here, Ed. And the chart is looking a little bit better, holding above this 21-day line after this big gap up after earnings in Q2 here, up almost 60% here. It looks like it digested those gains and moved higher. So thoughts here with TeraWolf?
Yeah, it does feel like the Bitcoin miner turned AI plays. They do have some advantages, and they just seem to holding up. But I don't know what to do with this. I mean, this has made such an enormous run. I mean, if you bought it on the breakout, some kind of the gap up or somewhere, okay, if you have a decent cushion, sure. But I don't see what you can do right now with a name like this.
All right, how about we look at a quantum play with Rigetti Computing? Earnings there scheduled for November 10th. And again, this looks like another one that had this breakout back here in early September. It had this spectacular run, but has pulled back off of these highs and is now trading below the 21-day line, but holding above the 50.
Yeah, I mean, so it's above the 50-day line, and so maybe you can see, okay, they could form some kind of base, but that's given up so much as well. That's basically 50% off its high. So it's lost 50%, and it still hasn't hit its 50-day line, which tells you how far up it was. So I just think that you need to that I don't know. It just seems like it's gone on a run, and it doesn't feel like speculative names are in favor right now. So, I mean, you never know what'll happen with any individual name, but it just doesn't seem like this is the time, this for Rigetti or names like that.
All right, how about we take a look at C Limited earnings for the Singapore e-commerce group scheduled on November 11th. So, Ed, another one here tried to break out back here in August out of this consolidation area around 172. It did move higher, but has since pulled back and is now trading decisively below the 50-day and is now flirting with that 200-day line.
I mean, maybe this needs to set up again. This is a place you can maybe find support, forms a new base, but it doesn't seem like it's actionable now. Now, they're in addition to just their Southeast Asia, as it sort of the name implies, is where their base is. But they're a big player now in Brazil, and so just like Mercado Libre is facing pressure, you're also facing, there's because of Amazon. That's also something that's probably affecting C there. I'm sure Amazon is also in Southeast Asia, but it's just that there's that the character change. You can see that sell off through the 50-day line, and it's tried to hold up, but it hasn't really, and it's sort of been in light volume. So we haven't seen any real signs of holding. It's held the 200-day line, but we haven't really seen any bounce. And so again, I think this one needs to set up again.
All right, how about we stay in the Asia theme? Let's take a look at 10 Cent Music. That's ticker TME. Earnings due on November 12th here, Ed.
Yeah, it's hit resistance at the 21-day line. I suppose if it gets above the 50-day line, that could be actionable. Though it's down, it's turned over. It's nice when they have the 50-day is sort of flat or moving higher. It's a little less interesting when the 50-day is coming down. But there's accelerating growth on the revenue side last couple of quarters. The earnings are strong. Next year isn't supposed to be so good. I don't know what's going on there, but so one to watch. But we'll have to wait for earnings.
All right, and let's wrap up with a look at Disney, a name familiar to most everyone. Earnings on November 13th. And this one is basing Ed with a 124.69 buy point, but seems to be in a downtrend and trading below its 50 and 21-day lines.
Yeah, it's really been hitting resistance. Hasn't even really tried very much, not to get back above. So that RS line's not great. You can see the volume. There's been a lot of volume spikes to the downside in the last few months, and not any really much of on the upside. So yeah, the growth of the game, we'll see. I mean, I'm interested in to see what they have to say about streaming, what they say about parks and such. But I don't think I'm interested in this right now as a buying opportunity. Obviously, gaps up, pauses. It could all of a sudden look good again. But I think you want to. This hasn't been showing a leadership for quite a while.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. And thank you so much for watching. We'll see you next week.